Hello everyone, welcome back to NAVELLIER'S Market Buzz, episode 17. Dad, welcome to New York.
It's good to be here.
It actually started snowing today, so it's an extra special day. So Dad, let's get started. People are wanting to know what's on your radar. What is the biggest hot stocks right now?
Well, the market's oversold, so there's a lot of hot stocks lately. But, obviously, make sure you own NVIDIA at this level. Let me give you a couple new stocks we added to the portfolios. One is Argonne, that's AGX. That's helping build out the utility grid. Their sales are forecast to be up over 20%. Their earnings are forecast to be up 28.7%. They have positive analyst revisions. AGX, great stock. A-rated, of course. Garmin also showed up, but we added that to our portfolios. GRMN, 13.4% forecasted sales growth. About 14.5% forecasted earnings growth, but big upward analyst revisions, big earnings surprises. Garmin has evolved in planes, boats, all kinds of navigation devices, all the personal GPS devices, whether you're a runner, a cyclist, even golf, they help you with that. So Garmin's a great company. So those are two new additions, both A-rated stocks, and we're very excited about them.
Now, what happened to SEZL this week?
There's a short seller out there called Hindenburg, and Hindenburg, you may know, hit Supermicro before Labor Day, and Supermicro obviously still trying to recover a lot of those losses, but they also hit SEZL. So what Hindenburg's doing is they're looking for things that have spiked, gone parabolic, and they just try to prick that bubble, for lack of a better word. I don't think any of the reports have any credibility on Supermicro or SEZL, but they try to prick that bubble. Now, what SEZL does is they provide payment plans and loans to consumers at outrageous rates, but they're borrowing at very high rates themselves. Okay, but they're obviously charging consumers even more. But there's a certain part of the population that wants to pay over time, and they operate through SEZL versus their credit card.
So now this week was quite the interesting week. Why did the market sell off after the Fed announcement?
Well, it wasn't a surprise to me, but I guess it was a surprise to everybody else. The Fed dot plot survey all the FOMC members, and they figure out how many rate cuts there's going to be. The consensus was 2, although there was a minority wanted 3, but most people thought there should be 4. And there will be 4 next year. The problem is the Fed can only see so far. So what's happening is Europe's in a recession. Okay, Germany's really having a horrible time. France has followed them. Both countries have no political leadership. The parliament in France controls the spending. That's why the prime minister resigned, and Macron's got to get a prime minister that can work with Marie Le Pen of the National Party. And then, of course, in Germany, they're going to have entirely new elections and a whole new chancellor. But because Europe is headless and because they're in a recession, the European Central Bank, which has been cutting rates, is going to have to cut rates 4 to 5 more times. And that's going to get their core rates down to 2 to 1.75. So as that starts to unfold next year, our Treasury yields are going to be coming down. And our Fed never fights Treasury yields. So that's why I'm so confident they'll cut rates 4 times next year. But see, this event hasn't happened yet. Okay, the dollar's very strong, and the Fed is not seeing the European rates pushing our rates down yet. So that's why the dot plot didn't show that. And the other thing is, the Fed changed their argument from or their mission from basically trying to prevent unemployment to going back and attacking inflation. Now, we had a PCE report, the Personal Consumption Expenditures Index. It came in much lower than expected. So if you back out what we call shelter costs, the Fed's at their 2% inflation target. But Jerome Powell made it very clear that they're shifting their priority to fight inflation, and that spooked everybody. Bond yields went higher. The final reason the market sold off, and of course, by the way, it's recovering now, but the reason it sold off on Wednesday is all the concerns over the debt limit in America, or are we going to have a government shutdown and all that good stuff. And, welcome to Washington. This is not what we do, but, what they try to do when they pass a bill, they try to put all the pork and pet projects on it that the lobbyists have done. And so Elon Musk actually, and then elect Trump came along and basically stopped the extension of this bill, and now they're working on a new bill.
So now, can you explain to us what's happening with Brazil?
Oh yeah, well, first of all, the president had brain surgery, emergency brain surgery, but they have to keep intervening to defend their currency. Brazil has a 10% budget deficit, which is the biggest in the world, among big countries. And so their currency is down 21% against the dollar this year. And so they're just trying to support their currency. I mean, the truth is, they're going to have to devalue their currency. You know, their neighbor Argentina already did that. Of course, they have Milei, the libertarian that's in charge. And but yeah, if you can't pay your interest on your debt and things are spinning out of control, the next step is to have a currency devaluation. And of course, that's what's happening right now. The Brazilian real is collapsing. Now, we have an interesting relationship with Brazil because China has invested a lot in Brazil. Lula da Silva, the president, has gone all the way to Shanghai and told everybody to stop trading U.S. dollars and start trading Chinese yuan. Well, guess what? Obviously, President-elect Trump wants to put a 100% tariff on him. So he's got to be quiet now and behave. So it's always interesting to watch what goes on in the rest of the world, but this is why the U.S. is an oasis.
Now for the exciting part. I would love to know what your predictions are for 2025.
Well, we already gave a hint that the Fed will be cutting rates 4 times, but the other big development that you need to know is that the U.S. has this incredible advantage compared to the rest of the world. Number 1, we're food and energy independent. Number 2, we have household formation in America. We still have a lot of regions of the country that have a lot of kids, the South, the Mountain West, that creates household formation. Utah's the fastest growing state in America, has been for some time. We also assimilate our immigrants. I know that's a big sore subject, but whether you came here legally or illegally, you get assimilated in America, and then you grow and prosper with us. And then finally, our 50 states are very competitive with each other. But demographics are such a big deal because in China they lost 2.08 million people last year. They're going to lose something similar this year. Europe has a population decline. They just abandoned a bunch of Greek islands, because the people couldn't take care of them, and I guess they moved them back to the mainland. And so those perfectly nice structures on some beautiful Greek islands here. So we'll see if they try to sell those homes for $1 like they do in Italy. So I can't explain just how important demographics are. So all these countries have a hard time growing. 1 is they're old. 2 is there's no household formation. And 3, their economies aren't hitting all cylinders. We're the opposite. That's one of the reasons we're the oasis out there. As far as the global economy is concerned, Asia's really sputtering. Europe's in recession. We're the engine of the world. The whole world has to come to us. And I think you'll see, because the dollar's so strong, it's going to keep inflation low, and also any impact from tariffs will be non-existent, because the dollar will make up for that. And furthermore, the U.S. is a huge, efficient economy. The goods come in, and whether they're sold through Costco or Walmart, our distribution channels are so efficient. So I do not expect the tariffs to create any significant inflation. And when Trump threatens tariffs, he's doing it mostly for negotiating power. That's what he does. He wants you uncomfortable, and you have to negotiate with him. And most of the other countries are onto him, but sometimes it makes big headlines. Energy outlook's going to be fascinating. We have to boost natural gas production. We have to boost our LNG output. Right now, Russia sells more LNG to Europe than we do since May. So that was not the plan. I'm sure Trump wants to fix that. Europe is offering to buy more energy from the U.S. if we don't mess with them on tariffs too much. So that's interesting. They're already trying to trade with us. But we're going to have a natural gas boom in America because we need natural gas to power all our new data centers. We have to double our utility grid. Now, there's nothing wrong with green energy, as Elon Musk pointed out, you could paint the desert with solar. It can run much of the United States. The only problem, there's no grid to send electricity. The reason electricity crackles when you hear it is that's an alternating current. So if you do put all the solar in the Southwest, and you have to send it to Salt Lake City or Denver or whatever, you got to get a direct current grid, and we don't have that. So we'll still have green energy in the places where it makes sense. The Southwest for solar, the Plains, Panhandle for Texas, Oklahoma for wind. But most of our new electricity is going to come from natural gas. So there's going to be a huge boom. Midstream companies are going to be doing really well. They just get paid on how much capacity they have. So I'm very excited about it. Crude oil, not so much. I have ExxonMobil in portfolios. That's because they discovered Guyana, and Guyana is a big deal for Exxon. But I did sell most of my integrated energy. The other comment I'd have is, as far as earnings are looking for in the new year, phenomenal. We just finished 8.4% earnings growth. The third quarter earnings that came out, in October, November. Next quarter, the earnings come out in January for the fourth quarter. Their S&P earnings are supposed to be up 12%. The next 2 quarters will be more double-digit earnings growth. So the market's going to go higher just on earnings alone.
So one of our subscribers wanted to know what your thoughts were on Bitcoin.
Well, Bitcoin and some other cryptos are obviously doing amazingly well because President-elect Trump wants the U.S. to dominate crypto trading. He doesn't want that to happen in South Korea, India, China. He wants it in America. And of course, if it's traded here, then all the accounts have to be segregated. So the stocks that are initially prospering are the ones that might be holding the crypto, and things like Coinbase and things like that. Now, I'm not recommending Coinbase at this time. I'm really not a crypto person, but obviously it's here to stay. And Trump's new head for the SEC, Paul Akin, is a crypto expert and has been advising people. So we'll see how far they go, okay? But I'd rather they create the exchange first, okay? And then we can assess things. As far as the actual cryptocurrency, I really don't have the expertise in analyzing those. But clearly they're benefiting from, the fact that it's going to be more legal, more accessible. Eventually they might have crypto reserves, but I think that's far off in the future.
And finally, I'd love to ask, what are your favorite stock picks right now?
Well, for the holidays, we thought we'd give you our fundamental A stocks, just so you understand what a fundamental A stock is. These are stocks that rank in the top 20% of sales growth, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, ounce earnings revisions, and earnings surprises. It is very, very hard to hit to average in the top 20% of all 8 criteria. But we happen to have 10 stocks. So one is ADMA. We've talked about that before, ADMA Biologics. Another one we just mentioned earlier, AGX, which is going to help build out our utility grid, Arden. CLMD is another one. CRNT is another one. We've mentioned these in previous weeks. ELMD, ELMED. Makes medical devices, respiratory equipment. FTI, which is a very, very important infrastructure stock. MPTI is a stock we've talked about in the past. Pay, PAY, which is a payment solutions. Again, it's an app that people can use to facilitate their transactions, and it's becoming more popular. Revolve Group, which of course you're an expert in because you're one of their customers.
Yes, and it'll be very popular for the Christmas and New Year's season.
Good. That's RVLV. Sezzle, which we've talked about earlier today, and in the past, that stock went up 174% in 1 week, a few weeks ago. And then one we haven't talked about is ZIM, Z-I-M. That's an Israeli shipping stock. They have a lot of container vessels, like over 130. And they also have 16 auto carriers, so the big carriers that ship cars around the world. And but they have very strong forecasted sales and earnings. So that's our gift to you this holiday season. These 10 great fundamental A stocks.
Perfect. Well, thank you so much for answering all my questions. And thank you to you all again for liking and subscribing. Once again, if you have any questions that you want us to answer next week, please leave them in the comments below. But until then, happy holidays, everyone. I hope everyone enjoys time with family and friends, and we'll see you all next week.
Great, everybody.